Okay, shifting focus back to markets, 11,877 is where Nifty is trading, and we've seen over 200-point cut coming in for Bank Nifty. Today, remember, is the penultimate trading day for the May series. You'll have the monthly as well as the weekly options expire tomorrow. So ahead of that, maybe because the markets have rallied so much, there could be some profit booking which is coming in. But should one be buying once again into these dips, which has been the template so far? Let's check with our technical experts. We're joined by Manav Chopra of INDIABULLS Ventures. And also joining us is Ruchit Jain of Angel Broking. Good afternoon to both of you gentlemen. Manav, let me come to you first. Will you use these dips considering tomorrow being the expiry day? Would you buy into any of these indices?
See, the markets have entered into a consolidation mode. We were expecting a good positive follow-on move, but that is definitely missing at the current levels. The important support for the Nifty now would be at 11,800. So till then, 11,800 holds. Yes, we will continue to be stock specific and maintain a buy and dips approach. The current trend is still intact. The structure is still positive, and most of the oscillators are still in the positive zone. So unless any support is not violated, I think it still makes sense to maintain a buy into this market. So the like I mentioned, 11,800 is the support, and if this sustains, we could see a retest of 12,000. And the actual momentum in the market would only come if the Nifty exceeds 12,000 on closing basis. And for the Bank Nifty, the resistance would be at 31,700, and a close above 31,700 would see a momentum. So right now, one only needs some price confirmation and a break of a resistance for any fresh momentum in the markets.
Okay. Richard, what about you? Are you taking a trade, and what are the levels that you're watching out?
Yeah, hi, very good afternoon. Well, after the recent move we have seen in last few trading sessions, there has been a consolidation phase on the index front. For tomorrow's expiry, we can see that 12,000 call option, right from last 1 week itself, it has the it had the highest open interest, and we have not seen a sustainable move or above the 12,000 mark. In fact, if we see in today's trading session, even 11,900 call option have been attracting good amount of open interest, which indicates that the call writers are quite active in the market for tomorrow's session. So we may see some consolidation or a bit of pressure may continue till tomorrow's trading session. So we are not expecting any significant momentum as far as tomorrow's expiry is concerned. But yes, if you look from a bit positional perspective, then the broader trend for the market still remains positive. And once this expiry factor is over, we expect the market to resume its positive momentum. So if one has to trade on the index front, then we are advising to avoid any trade for tomorrow. But yes, for next month, the markets should trade again trade above the 12,000 mark on a sustainable basis. So June monthly expiry 12,000 call option is available around in the range of 145 to 150 now. So I think that should be a good bet for short-term traders, and can go long on June monthly expiry 12,000 call option, keeping stop below 86, expecting target somewhere around 250.
All right. Those are some index calls coming in from our experts. Let's take a look at some stock-specific ideas as well. Ruchit, why don't you start off with the stock ideas for the afternoon?
So I have particular buy ideas. Firstly, if you look at some sectoral indices, then the mid-cap index has formed a good support base on the weekly chart at the recent lows. So we are expecting some mid-cap pockets to show some outperformance in short term. So both my ideas are from the mid-cap front. One is a buy call in Canfin Homes. After a recent up move, the stock price has seen a consolidation phase in last 4-5 trading sessions. On the hourly chart, this has led to formation of a bullish pennant pattern, which in technical analysis is generally known as a continuation pattern. So when we are expecting this momentum or this uptrend, short-term uptrend to continue in Canfin Home, traders can go long with stop below 341, expecting target around 380. And Dhampur Sugar has recently given a breakout from a consolidation phase of almost 4 months, and the breakout has been supported by very good volumes. In last couple of trading sessions, there has been some retracement, but this retracement should actually be used as a buying opportunity. So traders can go long on Dhampur Sugar with stop below 210, expecting short-term target around 255.
All right. Manav, what about your stock ideas?
Yes, my first buy call is on GAIL. The prices have seen a breakout on the daily charts as it has exceeded its falling trend line drawn from its recent highs, and most importantly, after a few days of consolidation, it has also managed to close above its long-term averages. The volumes are also quite supportive even at the current levels, which further validates the bullish structure It has an important support at 350 on the lower side, which is also the stop loss. We recommend a buy into GAIL for an upside target of 385. My second buy call is on Cipla. Basically, after a good sideways momentum, we have seen this pharma stock form a series of new highs. It has recently formed a new swing high and is currently consolidating its gain, having its support around the levels of 560. So the risk reward ratio plays a very important role into this place, since it is also trading above the short-term averages, and the oscillators have given a fresh buy crossover a few days back. I believe the support levels are likely to hold, so we recommend a buy into this, a stop loss of 560 on the lower side for an upside target of 595.
Okay, well, a lot of stocks to be discussed with our experts, with the technical experts. Manav and Ruchit are with us. Let's get in Gurmeet as well for a quick talk on the fundamentals. Gurmeet, good having you. Thanks much for joining in. Gurmeet, there's a bit of a reversion to mean reversion to IT in the session today. We were talking about this last week. There is some buying that we see in some of the large cap IT names. Is this essentially after having been beaten down so much, some value hunting happening or something else?
So Neeraj, actually could be both. Also, I think I personally think, not a currency expert though, I think rupee will see some more depreciation, looking at what's happening globally, the trade wars, what is happening to yuan to a dollar. So very likely inflation. Also, if you see the relative difference between us and US, warrants a 2-3% kind of a move in rupee again, but that's again a function of, in the short term, of flows as well. And also a few pockets, especially if you look at TCS, Infy, even Tech Mahindra, for example, which had a tad soft quarter and some weakness in the enterprise business. The telecom vertical grew for the third successive quarter. So also the underlying growth, the guidance remains close to double digit. The margin erosion was largely more because of FX and the employee costs, which we have been discussing. So IT looks a very steady play in these kind of markets where you are a little confused in terms of where to put incremental money, because the banks and financials have already run up quite a bit from what we have been discussing in last 2 months. So it's a bit of both value hunting and some mean reversion.
Gurmeet, did you have a chance to look at some of the consumer name numbers that have come out thus far? But TTK Prestige, for example, revenues up 7-odd%, profits up about 19-odd%. Any thoughts on the stock?
Yeah. So I'm a long-term buy on. I have a buy on both TTK Prestige and Hawkins, Neeraj, because I think this is a very, very secular play. See what has happened. If you see even the commentary of some of the FMCG names, the rural demand, which was 1.3, 1.4 times to the urban demand, is now at about 1.1, 1.15. And that's where so while TTK had a decent number, but if you see a Q on Q, obviously because of the marriage season, because of Q3 being traditionally a very good quarter, it affects you. But as I said, home improvement as a theme, is here to stay. The kind of spending we are seeing on kitchens these days, on whether those are gas stoves, whether those are pressure cookers, whether those are chimneys, induction cooktops, cleaning solutions. I think they have a wide variety of products, and I think their distribution reach has expanded with the better tie-ups in the larger retail formats. Again, there's a lot of product innovation happening. If you see the number of store keeping units, they are registering a steady increase. So to me, it's a secular story. Stock has corrected quite a bit from 9,000 levels to 7,300 levels, which is almost a 20% correction. So one can buy these. Even Havells had a good set of numbers. So if you remove Lloyd's, the other divisions did fairly well. And if you remove the employee benefit cost, which went up to 222 crores against 160, if you remove that, the numbers were fairly okay considering the slowdown we have seen in this space.
Okay. Just taking a look at what's been happening in the broader market space now, when individual stock moves, and getting some chart checks as well going. Both our technical analysts are still here with us. Starting off with some big moves that we're seeing today in the logistics space. So, just pull up Blue Dart, Aegis Logistics. These are the names that are doing well in today's session. Aside from that, Snowman Logistics, smaller name, but is up about 5.5% odd. Aegis Logistics is up another 5 odd percent. Gati is up 3.5%. Would you look at any of these stocks, Ruchit?
Yeah, I think if we do some relative strength analysis of all these names, then Aegis Logistics amongst the SPAC stands out one of the outperformer. Also, recently the stock has consolidated above its weekly 200 moving average and seems to have resumed its high degree uptrend. So one can look to initiate fresh buying positions, but on some more dips, maybe if we get it around 222, 225, the risk reward ratio would again become favorable there. So one can initiate a buy on dips approach in Aegis Logistics, buy on dips around 222, keeping stop loss below 208, and expect target somewhere around 250 to 255 in next 1 to 2 months perspective.
Okay, that's the view coming in on the logistics space, the technical view, at least on Aegis, which Ruchit recommends to buy at these levels. Gurmeet, a word on the pharma pack. We had a lot of numbers coming by yesterday. Sun Pharma, I think there was a one-off which impacted the numbers. But even if you look at Aurobindo, the numbers looked pretty good. But I guess the debt levels, if one were to look at the balance sheet, that went up, whereas Pfizer's number were pretty much muted. We've seen some recovery coming by for most of these stocks, but looking at the valuations and how the sector has been a laggard in the last few years, how would you approach this space now?
So, Navneet, very, very selectively, because it's a very complicated business and there are too many moving parts to come at a buy call in these kind of markets. I think what we like is Ipca Labs, because it had a good set of numbers. If you see its product portfolio, there are more than 3,500 formulations, 80 APIs. The global the tie-up they had, there was a bit of a concern on that. Again, that seems to be behind us. If you look at the number of product registrations across the country, it looks good. Even their India business has been doing very well of late. So I think that's one clear leader in the antimalarial therapeutic segment and some of the chronic segments. So that's one area. Divi's Labs looks I've been I've had a very consistent view on Divi's despite the valuations being a little bit of a stretch, because that's a perfect combination of both generics and CRAMS. I think their ability to add value to the late life cycle strategy and their relationship with the innovator companies is very difficult to replicate. Very, very superior chemistry skills. So that's another paper is the right combination of volume and margin being aided by CRAMS. Amongst the large names, maybe Dr. Reddy, looks good. They focus on China, will yield a lot of results. They have a 2-decade tie-up with Lotem there. The India team is completely new. There's a lot of focus there. China to me is a very, very big shift. So their strategy of moving slightly away from US, focus on India and some of the other markets, to me will probably pay off. China again, because of the anti-oncology and anti-blood clotting drug is where they're likely to get an approval, which is a very large. Last estimate was about $1.5 billion plus. So these are the three names I would look at, and be a little patient with some of the larger names, because there've been a lot of disappointments with Sun, Lupin. Last 2-3 years have been very, very bad for investors. So be a little careful in venturing out in pharma.
The other stocks that need focus are these small finance banks. Ujjivan and Equitas today have been beaten down since early morning trade. The RBI refusing to slacken for them with regards to the small finance bank listing norms. I think after 3 years of commencement of business, that's a business standard report that came out, which suggested the same, and therefore both of these stocks, Ujjivan and Equitas, are down under in trade this morning, about 4.5 odd percent. Remember, actually we were talking about when the original conversation had started a few months ago, and we had spoken to both the management of Ujjivan and Equitas. For Equitas, it would be a bigger blow if they had to separate out their small bank business and list it separately, because then they'll just remain a holding company. There's no operations under the holding company then, so it becomes a little bit more tricky for Equitas rather than Ujjivan. But
I think the fear also might be, while Ujjivan told us that there's no truth to the business standard story, and the meeting is scheduled to happen in the month of June, so until then they aren't quite talking much about it. But I think the market was working with an expectation, and a lot of traders were piling on the long positions thinking that they'll get some relaxations coming in. On the contrary, business standard put out this news, and I guess Maybe that's why this disappointment, because otherwise the management category told us that RBI hasn't taken any decision as of now.
And it's actually still some time left for this to actually kick in. I think next year, September, is when they actually have to go ahead and list. But quickly, Gurmeet, on the small finance companies?
So a word for me, Devina, for reasons you've just stated. I think there are clearly better opportunities with companies with good parentage. We have been discussing M&M the other week. I think if you see, despite a challenging environment, doing quite well. The asset book is almost 61,000 crores now, growing, very well. They have a very deep rural penetration as well as reach. Even if you see the dependence on M&M, I think it's come down by almost 200 to 300 basis points in terms of the financing they do. Very, very good liability book. The ROA is currently at 2.6%. The borrowing costs have been fairly stable, and very, very diversified book. Not just farm equipment, and it's a right mix of CVs, SME, farm. And everything. So I think better companies with better parentage. I think Bajaj Finance, again, despite the prices, I think you will see, it's gaining more market share with the kind of stress issues we are seeing around. So let's stick to them. There is earning growth, there is liability side which is looking better, and the ROAs are consistently improving. Not a time to speculate and preempt some movements, especially when there's a regulator involved.
Okay, that's the view coming in on these NBFCs. Pull up JSW Steel. That's the top loser right now as we speak on Nifty. It's down almost 4% in trade. The 52-week low is somewhere about 257, and the stock's right now trading around the levels of 281 or 82. Manav, on the charts, the fall that we've seen, would that warrant any trade?
Yes, looking at the prices, it has already declined from its peak, and I sense, looking at the support and the indicators, it's not suggesting any short-term bottom in place. There could be a small pullback rally, but looking at the tone for the stock in the near-term perspective, and since the oscillators have given a bearish cross, I believe there could be some more corrective decline into this. And going forward, another 5 to 10% could be possible on the downside.
Okay, that's JSW Steel for you. Let me mark a couple of more stocks from the broader market. S Chand is down 12 to 13%, but remember the numbers of this one also came yesterday. That's probably reacted to the numbers. PC Jewelers, which was seen some bit of traction, that's fallen about 9 to 9.5% as we speak. And some of the other stocks, you've got PNB now. The numbers came in yesterday. The stock's now down nearly 5% in trade. Remember, the provisions were definitely higher, but if one were to look at the fine print closely, the fresh slippages were way higher than what the street was expecting this time around. Gurmeet, a word on the PSU banking space, or rather you can include the private banking space. So far, the numbers which have come out, the endeavor and the effort of most of these banks have been to provide for maximum provisions what they can before entering the new financial year. But in case of PNB, I guess the street's not taken in good spirit, and the stocks seen a sharper cut of almost 5%.
I think the provisioning was much higher. I think Courtesy Jet, IFS, and few other names. I think the top two picks in PSU names for me will be SBI and BOB, which I've been reiterating. And SBI in particularly because I think there will be a QIP which could be in between 15 to 18,000 crores. There's a lot of market buzz around that. So that could be one trigger. Also, I think there is a steady improvement in the PCI levels. I think their credit cost will come down incrementally. SBI also is undergoing, if you visit.
Gurmeet, allow me to just come in, please. We'll just get back to your answer, but remember I was asking about TTK Prestige numbers, the management joining in, so I just have to take a quick detour and go to them. The Mr. T.T. Jagannathan, he's chairman of TTK Prestige, joins us right now on the phone line to take us through the numbers. Steady state numbers, revenues up 7%, margins expanding a bit, net profit up 20%. Mr. Jagannathan, good afternoon. Are you happy with the number, or would you have hoped for more?
Is anyone ever happy with the number?
Well, a lot of people are. I'm wondering if you are.
Well, I certainly would have liked more, okay. But I'm not unhappy with the numbers.
Okay, can you tell us what could have happened to take the revenues higher than where they are? It's a 7% growth as I see.
Yes, because online collapse because of the new government regulations. Government passed new regulations in the middle of February. So February and March was almost nil online.
Okay. I'm guessing that situation would be continuing, Mr. Jagannathan, or are companies like you trying to
No,
come around that?
It's not companies like me. It's the online companies. They're working their way out of it.
Okay, but for now, the resolution wouldn't have been reached, I'm guessing.
It has partially been reached.
Okay, so have April and May, therefore, sir, looked a bit better on the online sales numbers compared to what Feb and March were?
Yes.
Okay, they have. Despite that online thing collapsing, as you said, your operational numbers have looked reasonably okay, sir. The margins too at 14.5, higher than the last quarter last time.
Yes.
What's gone right?
Yes.
So how has that happened?
How did it happen?
Yeah. I mean, I'm guessing if the top line growth and the online system collapsing completely, I would have thought that maybe it would have shown on the margins too, but the margins have expanded.
The raw material prices were very benign. Throughout the year, the margins expanded.
Okay. And do they continue to be benign, sir?
As of now, they continue to be benign. What will happen tomorrow, I don't know.
Okay. Fair call. The belief that a lot of brokerages have that with the Ujjwala rollout, and your operating leverage working very beautifully for you, these growth rates and the margin expansion would continue. Fair assessment?
Fair assessment, yes.
Okay. And with the capacity utilization levels for you being so high, have you been able to hike prices further, Mr. Jagannathan?
What has capacity to do with prices?
Well, I would presume that if your capacity utilization levels are higher, you do not want to sell more produce because you are comfortably selling the produce that you anyways have. So maybe you can take some hikes.
My capacity utilization is not high at all. It's in fact, my capacity is infinite.
Okay.
I can add capacity this month, next month after that.
Okay, there's a brokerage note, sir, which says that because of the rollout and LBG coverage reaching 90%, the strong demand has led to your utilization levels across plants moving up. I was referring to that.
That's correct. It has moved up. But wait, does anyone say I've utilized the capacity fully?
Not fully, but it's reached at fairly high levels, sir. Is that incorrect? The brokerage is incorrect?
Like I said, I can increase capacity at will.
Okay. Okay. Let me then ask you, sir, if there is any kind of guidance that you can leave us with for the revenue growth for FY20.
I have stopped giving guidance.
Okay, but would it be better than the 7% for Q4?
I should think so, yes.
You should think so. Fair call. Good having you, Mr. Jagannathan. Thank you so much for taking the time out and being with us. That's TTK Prestige and talking about how the numbers could be, well, very little information given, but yeah, maybe better than the 7% top line growth that the companies clocked in Q4 is what they could do in FY20. Gurmeet, we spoke about this. You spoke about all the companies within that pocket as well. The question would be that if companies are talking about how this unorganized to organized movement isn't happening in as quick a fashion as they would have thought, would there be hiccups to the valuations that some of those companies had gotten? I mean, Symphony is a case in point, right? It's gotten pulled down quite vehemently in the last 1 year, FY20, because of what's been arguably a forgettable year. Anything else that fits that bill?
So, Neeraj, you're right. I think so. The room for disappointment on the valuation multiple you are I don't think so. It's there, and you're absolutely right on it. But I would still think talking of TTK Prestige. So I have a lot of clients who are suppliers to these pressure cooker companies, and they don't have stock. So he was right when he said their ability to expand is and that's why I said this is something which is a very secular play, because the market itself will probably grow to 4x, 5x. So kitchenware, your some of the tiles businesses, the sanitary ware makers, and I think housing will revive. So if you get your bets right, there can be odd quarters of a Symphony disappointing you, or a Voltas disappointing you, or something coming, even in some of the other names. I think barring the plywood makers, because there the Chinese modular furniture has made a big dent, and the less wood is being used, and people are preferring to buy ready-made and customized cheaper stuff. I think the other house improvement themes, which are the kitchenware, the sanitary ware, the overall white goods space looks very, very attractive to me.
Okay, Gurmeet. We'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. By the way, the markets have just come off. Nifty Bank is 300 points lower. The Nifty 50 100 points. Manav Chopra, I don't quite, excuse me for not quite recollecting what your view was at the start of the show, but 1% lower, what would your advice be to anybody, whether for initiating a trade or whether acting upon an existing trade?
See,
Yeah, please carry on, Manav. Can hear you.
Neeraj, it's for Nifty or Bank Nifty? Let me correct.
Both.
Yes. So what I'm trying to say is that, okay. See, see, looking at the markets, it will be, specific range bound for the near term. The support for the Nifty on the lower side will be 11,800. So as long as 11,800 is holding, we expect this volatility to continue or the consolidation phase to continue. And only on break below 11,800 on the Nifty is when the short-term trend reversal will come into the picture. For Bank Nifty, the important support is at 31,000, so which is 200 points away. So the markets are nearing to its support levels, and as long as the support is not breached, we assume that the trend is likely to continue. There will be some stock specific changes of volatility, but I believe in the near term the energy space and the banks, specifically the private banks, would be the sector to look out for too. And if someone has to buy, I think the private banks would be one of the banks in case of any sort of a decline should look to buy on dips.
Okay. Dish TV now is around 30 odd, 31 odd levels. Today is down about 5 odd %. You're seeing some amount of profit taking on an Avanti Feeds as well. That stock's down about 5%, but still its 7-day tally is closer to 12 or 13 odd % on the upside. Quick call, Ruchit, on Avanti Feeds.
I think although a couple of days back we had seen a sharp up move in a single trading session from 340 to 300 to 400, 405 kind of levels. But if we look at some of the positional charts, and in last 6 months there has been a broad consolidation phase, and every time the stock gives an up move supported by good volumes, the follow-up move is missing. So I think one need to wait for a follow-up kind of move to initiate any kind of fresh longs. 420, 425 is the range where the stock has a very stiff resistance on the higher side, whereas 350 around 350 the stock is a support. So I think this broad consolidation would continue, and only on a breakout of this range we should expect next set of directional move.
Okay. Got that. Gentlemen, stay on with us. Lots more to talk about, and the markets have turned for the worse. So you've got the small cap and the mid cap indices losing almost 1%. The Nifty 50 for itself also. I think this is the lowest point of the day right now. Sensex now at 39,490. Take that short break. On the other side, we'll get you the Fab 4 stocks of the day. We'll talk about some closing strategies as well.
Welcome back. You're still watching Countdown with us. 28 minutes to go for markets to close, and we've seen some profit booking kicking in the last few minutes of trade, but Nifty's actually bounced back. The low was about 11,836, and now we are at about 11,870. Actually, if you would have looked at the options data in the morning, a straddle on 11,900, which had a combined premium of 100 rupees, was giving you that range of between 11,850 to 11,950. So 850 was your first support for the day. We breached that mark, but we've recovered from there. Let's see if we close above that mark or no. Bank Nifty is the other one, which is an outperformer for May series, and probably that's the reason why you're seeing more profit booking coming in there. 270 points lower for Bank Nifty, in the broader markets alongside the benchmark indices too have seen some bit of correction. But there are a lot of stocks moving around. We'll find out which are the Fab 4 stocks of the day. Let's go across to Sharad Dubey to find out. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock I've picked up is Power Finance Corporation, which came out with a strong operational set of numbers, and the stock was up as high as almost 4%, with a loan book growth of almost 13% and the net profit rising by 58% to around 6,953 odd crore rupees. Up next, we are having Info Edge, which is up almost 3.8% after CLSA came out with its rating, with hiking the target price to almost 2,400 rupees from around 20,070. This is based on a FY20, all the segments will be firing all the cylinders, especially in the Naukri segment and the 99-acre segment. And also Zomato's growth trajectory is something which they'll be watching out for. And the next stock we are having is Cadila Healthcare, which is up almost 1.8%. It came out with a really good set of numbers, and the revenues were up almost 15% to around 3,730 odd crore rupees. This was due to the consolidation seen in the craft portfolio in the wellness segment, and also the US revenues grew by around 9 odd %. The last stock we are having is GSFC, which is up almost 2.7%, as fresh longs were seen and a high open interest of 48%, while the volumes traded almost 6 times its 20-day average. Back to you.
Okay, thanks a lot, Sharad, for bringing those Fab 4 stocks for us. Let's move on and discuss what foreign investors should be doing. Should foreign investors choose India over other emerging markets despite of higher valuations? Manishi Ray Chaudhary of BNP Paribas answers the question. Listen in.
We upgraded India to an overweight in late March. And right after the election outcome, we increased the weight of India even more. So we have a pretty significant overweight on India right now. If you look at the earnings picture, earnings estimates, they are no doubt drifting down in India, as in much of Asia. But at the same time, the picture looks much less dire in India than in North Asia. If you look at Korea, consensus average EPS estimate is down 35% over past 8 months. China down 20%, even though that seems to be bottoming out. Taiwan down 25%. In comparison, India has declined possibly about 7 to 8%, and it's been a gradual, slow decline. Similar is the picture in some pockets of South Asia like Indonesia. So these are the markets which, from an FII's perspective, are looking relatively less risky than the major pockets of North Asia, which contribute almost 70% of the MSCI Asia ex-Japan index.
There's a chart, Manishi, though, that we put out this morning. Maybe we can bring it up as well. It was the ratio of the Nifty P to the MSCI Asia market price to earnings, and MSCI World P, excuse me, and that's back to 2019 highs. Yeah. It's not looking very pretty in terms of valuations, even though the EPS cuts haven't, or the earnings cuts haven't been that stark in India.
Yes. No, that is a concern. That is a valid concern. And, you know, I think even India would face a certain degree of earnings cuts going forward. When I look at the consensus estimates, it's about 18.2% for 2019, which is the proxy for fiscal 20. For fiscal 21, I see a number close to 21%. It's difficult for these numbers to sustain. I think they would finally settle at around the early to mid-teens, maybe around 14, 15% or so. Having said that, the earnings cuts are not so deep as we have seen in North Asia and are likely to see more. You know, so when you look at these valuations, let's say price earnings, it might appear cheap for North Asia right now. But if that E itself is questionable, then that P might be a completely different number than what we are seeing today.
And that likelihood is lesser in India.
I would think so.
But if we're looking at you know, this consensus earning of 15 odd %, then why should we pay 19 times, 20 times?
See, one of the reasons is that...
I mean, we might, but why would
why would others pay? Yeah. Right. Right. So India always has had one advantage, which is that this is really a more capital efficient market. If you look at return on capital, if you look at return on equity, India, or at least the top 100 companies of India, they would generate something like, you know, higher teens kind of returns. There's a reason behind it. India historically has been a capital-starved economy, and that's why companies are so cautious about spending capital. Yeah. So I think this is, you know, it's something ingrained in the management psyche of the large Indian companies. And that is why this capital efficiency tends to lead to that valuation premium. I don't think that's likely to go away anytime soon.
In fact, this was a very similar commentary that came from Mark Mobius as well. He said, I like the frugality of Indian companies.
Absolutely.
And you know, they're pretty tempered in the kind of big ticket investments they make. They make those decisions after thinking on it for a lot of time.
Yes.
And it probably shows up in the way they
there is, you know, I mean,
ratios.
I wish I could show that chart. I have it in some of my presentations. It is reflected in the indebtedness of countries. If you look at debt to GDP ratio, Asia went from 140% to 210%. What was the biggest culprit? This is right after GFC, from 2008 to about 2018 or so. China went from 150 to 260 to 270%. India has stubbornly remained at about 115 to 120% over last maybe 10 to 15 years. The total debt to GDP ratio, and I'm here commenting on both household debt, government debt, and corporate debt, that hasn't really budged much for India. And this is exactly a reflection of the point that you make just now about frugality.
All right, that's Manishi Ray Chaudhary there. Overweight on India. Bringing in another guest then, Jagannathan Thunuguntla of Centrum Broking. He's joining us on the show right now. Jagannathan, thanks very much for taking out the time. What is it that you're doing right now and what are you advising clients?
We are coming to the almost to the fag end of result season. The ongoing result season has not been that exciting. If you look at the Nifty 50 stock basket, the BFSI is a clear cheerleader in terms of earnings performance, with almost 300% jump in the profit because low base effect, because previous years there was a lot of cleanup and NPA provisions and so on and so forth. Whereas if we come to the non-BFSI portion of the Nifty, the bottom line growth is as low as just 2%. So I think probably we are in the middle of one of the slowest earnings season in many years. So keeping that into account, probably I think the levels where Nifty is, I think probably will have to cool off and consolidate a bit. I think make no mistake, Nifty doesn't have the firepower of earnings to back it up. I think the political stability will bring in some animal spirits, but at the same time earnings momentum has to come back for the Nifty to sustain at the levels where it is, because make no mistake, at the end of the day markets are function of earnings. Sooner than later that will be realized. So, and also the GDP number figure that is expected to come in a day or two is also expected to be close to 6%, or even there are some expectations probably we may be even in the 5 handle. So keeping all those things into account, probably some the upside at upside there may be profit booking coming on the market. Investors should keep the resources and ready so that they can use the dips to buy.
And if at all you do see these dips coming in, where exactly is the focus going to remain? I mean, you must have had some stocks that you've kept an eye out for.
From the long-term point of view, we feel life insurance companies and the insurance as a sector offering excellent opportunity if you are looking for building up a portfolio for next 5-10 years. Because insurance is at the stage where probably banking was some 20 years back. So I think insurance as a space is new to the capital markets, and all the murky names are available for buying. We feel quite comfortable with HDFC Life and SBI Life, and also thanks to the offer for sales that some of the existing shareholders have done. Many of the stocks were available about a month or 2 months back at very good prices. So I think if somebody is building up the portfolio for the next 10-15 years point of view, these insurance companies can offer very good opportunity to accumulate. That is from the long-term point of view. From the short-term point of view, as a contrarian bets, probably just purely as a contrarian opportunity, one may look at consumption and auto. At this juncture, by no means they are undervalued. By no means they are really having the earnings momentum behind them. But as a purely contrarian bet, probably one can look at the auto and consumption. And lastly, as a more popular and more current day, the seasonal and current day favorite of the market is corporate banks. I think that's more easy trade at this juncture, considering most of the cleanup is done and they have the high weightage in the Nifty, and also that is the only segment in the market which is showing earnings outperformance, the BFSI. The corporate banks will remain to be the solid outperformers at this juncture. I think, in my opinion, that is the 3 ways of playing the market at this juncture.
You wouldn't probably look at a contrarian play on PSU banks, Jagannathan, considering that you have seen a cleanup happening there as well, aggressive provisioning. They've front-loaded a lot of the provisions, and now the path to growth is cleared up for them in quite a meaningful way.
If you are any which you are playing for the cleanup of the balance sheets and the NPA recovery, why not to play with the ICICI Bank and Axis Bank? Because make no mistake, you are playing the same theme at the end of the day. If private sector focused management is doing the same thing, why do you want to bet on the PSU management for the same theme? If let's assume there is no ICICI Bank, no Axis Bank, then it would have been a different ball game. Then you would have been forced to play the PSUs to play that NPA recovery cycle. You wouldn't have had no choice. But considering you have a choice of ICICI Bank and Axis Bank representing the same theme, I don't see a reason why one has to stick their neck out and take the risk with PSU banks.
Okay. Stay on with us, Jagannathan. Just want to address few stocks. Pull up the intraday chart of NMDC. Remember the stock reacted to the earnings in the morning session. At one point of time, it was up 4% in trade, but right now just about flattened, up only 0.5% at levels of about 102.7. Manav, if somebody had taken a long position in the morning, what should they do now?
See, the prices have already seen a good move from its recent lows of 90, and looking at the momentum indicator, it is still indicating some sort of a positive bias. It has important support around the levels of 100, so anybody holding long position should have a strict stop loss of 100, because that also coincides with the short-term averages. I believe in the near-term perspective, if you look at on the weekly charts, if the prices sees a break above 105 and closes above it going forward in next couple of trading sessions, this momentum rally could see some further legs on the upside. So at the moment, I think looking at the structure, it still looks positive. 100 can be a stop loss on the lower side.
And the other one which has gone up is Max Financial. This one came out with the numbers yesterday, and the stock's been trading in the positive territory, though it had a opening in the red, but the stock recovered from those lower levels, and currently it's sitting at almost high point of the day. Remember, the VNB business did pretty well for this company. Richard, on the charts at 440, Max Financial, would you take a bet here, considering it is sitting almost at day's high level?
Not really, because if we look at the recent historical data, then this has been one of the underperformer within the mid-cap space. And also recently we have seen many such occasions where for one or two trading sessions the stock moves higher, but again there has been no follow-up move. So I think unless we see a breakout above 460 mark or the up move which has been supported by very high volumes, one should clearly avoid such intraday up moves in Max Financials.
Okay, avoid any such trade in Max Financial is what Richard is advising. Jagannathan, I heard you mentioning autos as a contrary bet. We had M&M numbers coming a while back, and they did outperform, or rather they were better than what the street was expecting. There was some sort of margin expansion seen despite of volume growth declining when it came to the tractor segment, which also indicated a couple of analysts who came on the channel said the pricing power for this company could be coming back. Is this the stock that features in your list when it comes to the auto pack, or would you bet on something else?
No, the M&M is definitely right on the top of the selection pack, no question about that. Remember one thing, if you look at Maruti and M&M, in 2014 when the government got formed, NDA government got formed, Maruti was around 2,000. It went all the way to 10,000. So Maruti rallied 5 times during the time of last 5 years. Whereas M&M in 2014, it was around 650 when the NDA government formed. Even now it's 650, meaning thereby M&M has not performed for 5 years. So much value got inbuilt into the stock now with no stock price rally. I think it's most undervalued auto name at this juncture. And also if you look at M&M, the overall, because of its holdings in Tech Mahindra and Mahindra Holidays and Mahindra Lifespace Developers and so many other group companies, only 60% of the market cap is getting influenced by auto sector. Remaining 40% is coming from the technology sector and the other sectors. Meaning thereby, if you are buying M&M, it is like a mini mutual fund where with a high exposure to auto sector. So I think M&M is offering a great amount of comfort even during auto slowdown. Even if there is auto slowdown, 60% of your business will get impacted. Remaining 40% will pull the load. Whereas if you are buying Maruti, technically entire 100% has to be pulled by the auto sector.
We'll have to stop you there. We've got Mr. Pavan Goenka talking on the sidelines of the M&M results.
The presidents of the two major businesses, the auto business and FES business, here. But this time Rajesh Jejurikar couldn't be here because today is his son's wedding. And I guess that's a good enough reason for him not to attend the press meet. And therefore Nikhil Madgaonkar will be filling in for Rajesh Jejurikar. What I'll do is very quickly give you a little bit of an overview of last year. And after that, we will have Rajan and then Nikhil talk about auto and tractor business in detail. And then Partha will give you an overall summary, not just of M&M and MVML, plus, but also consolidated result for Mahindra Group. So last year, as you know, was a fairly up and down year. And I'll talk a little more about that, and then the two businesses will also talk about it. But we did manage to again cross 1 million vehicle and tractor sales globally. This includes SsangYong and all the other subsidiaries that we have outside India. And the second time in 2 years that we have crossed 1 million vehicle. We did quite a bit in terms of global brand building. And 2-3 things that we have been talking about have really helped us to take Mahindra brand truly global. Formula E has played a big role in that. Team has performed quite well up until the last 2 or 3 races. And as you can see in this picture that we had the #1 position in one of the races. And this has really helped our brand to become global. We had launch of SsangYong new Corando vehicle in Geneva, which was enthusiastically received. And perhaps the biggest applause that we got last year in the global stage was for launch of, not launch, but display of Battista in, again, Geneva Motor Show. And you can see from the crowd that this was a very well-received launch by us. You know that with Battista and with Corando or SsangYong, we don't directly associate Mahindra brand, but everybody knows that these are Mahindra Group companies, and therefore there is a tremendous brand rub-off that we get from Mahindra brand. If I look at last year, and we will talk more about that, it really was a tale of 2 halves. And I'm saying half tongue-in-cheek because it's 5 months and 7 months. And as you can see, for each segment that we are in, the growth in the industry for the first half was significantly higher than for the second half, the second 7 months, that is. Passenger vehicles from +9% to -2%, tractors from +20% to just about even +1%, HCVs from 66% to -10%, and this was clearly hurt by the axle loading norm, as most of you are well aware of. So what are the highlights for last year? And now this is too faint for me to be able to read, so I'll have to do this. Last year, and again, all of these will go in detail with you. Highest ever volume for both auto and tractor. Highest ever export for auto. 45 lakh tractor cumulative sale, the only company in the world to have done that. Highest ever revenue for auto and tractor. Highest ever profit for tractor. Reasonably protected margin. I say reasonably protected because there is a slight drop in margin. But that is only when we compare to last year, which was one of the best years, the best year perhaps, in terms of margin. And when we look at historical average of 6-7 years, we are right there in where we have been in the last 6-7 years, both for auto as well as tractor. Growth in farm mechanization, which is a very important development for us, and Nikhil will talk more about that. And we sold 10,000 electric vehicles in last year, for the first time crossing 10,000 mark. Admittedly, 8,000 out of these were the E-Alpha, which is not lithium ion, which is lead acid, but hopefully this year you will see more of Trio sales happening, and there are a couple of Trios outside that you are welcome to sit in and take pictures of. And then successful launch of Java. This again is a very important event, obviously had no impact on P&L of last year because we started selling only from this financial year. But as you all know that it's been received very well as a product pricing, and we have very high bookings. So the 3 successful launches that we have been talking about throughout the year, Rajan will cover that in more detail. That obviously was a very important development for us in the last year, and you will see the effect of that in the market share of the 4th quarter in the UV segment. So what I'll do in the last 2-3 slides is talk about 5 things that we'll be watching for in 2020. Last year also.
All right, just about that's Mahindra and Mahindra, of course, and we'll keep on getting you some of the key numbers and the key details that they lay out, but less than 7 minutes left for the markets to shut shop, so need to focus on the markets at hand. First, getting closing strategies from our experts. Rajit, to you first, your top closing strategy.
I would recommend buying Pidilite from a BTST perspective. One can go long at current levels with stop loss below 1245, expecting target somewhere around 1300 to 1310 tomorrow.
Okay. And what about you, Manav?
See, at the current levels, I like GSFC. In fact, the prices have seen a good breakout today on the daily charts. The volumes are also showing a good traction, at least on the near-term perspective. The stock has important support at 104, 103 on the lower side. So with the stop loss of 103, we expect an upside target of 110.
Okay, that's a buy call coming in on GSFC. By the way, the steel makers are under pressure. So we did take a technical check on JSW Steel a while back, but you've also got something like Tata Steel, which is down in trade. Even Steel Authority, last when I checked, was trading with some bit of selling pressure. 3% lower for Tata Steel, and Steel Authority is down almost 3.5%. Jagannathan, coming here on the steel companies, if you have coverage here, what should one do?
In the specific names, we may not have coverage, but in general, about steel, while there is always a risk of U.S.-China trade war getting escalated, and also that may lead to metal demand slowdown. That's a real risk, and also many bond yield curves across the world are showing the signs of inversion. So, meaning thereby recession maybe 1.5 years away. So, we have to be very careful with the metal themes. So I think it will be better to focus on more domestic, more easy themes, because if you want to play the Modi or the political wave, I think metal is a more international theme. Better to focus on more local themes so that you can take advantage of the political alignment.
The other stock is V-Guard. Should pull that stock up. The Q4 standalone numbers came in way better than street expectations. Margins almost doubled for the counter. The stock, though, saw an initial move up and then came off from its highs, but is still up closer to 1% in a falling market. EBITDA was up 2.1 times. Do you track this one, Jagannathan?
Which stock you say?
V-Guard.
So V-Guard, overall now the main challenge is that the entire the demand is a little slow. I think we have to keep that in mind, and also in terms of valuations, also one has to look into some of these themes. I think at this juncture we don't have the formal coverage. I may not give the perfect recommendation on that.
Jagannathan, if one were to use the dips to make their portfolio, which stock would you advise?
At this moment, we are maintaining a bullish view on stocks like HDFC Life, and even in the consumption, even though there is slowdown, we feel comfortable with Nestle on any dip opportunity. And also M&M, we have been maintaining a positive view on dips. These two are more on a contrarian bet. And ICICI Bank and Axis Bank at lower levels, whenever there is a dip, use the dips for accumulation opportunity. As far as possible, these are some of the large caps. In the mid caps, we feel comfortable with Varroc Engineering, an auto ancillary name, and stock fell almost 50-60% from its highs. And we also feel comfortable with Canfin Homes. We have been maintaining bullish stand on that right from 240 levels. We feel once the new government, once the Modi government, if they can push on the housing reforms aggressively, some of these stocks can take major advantage. However, NBFC crisis is far from over, so there will be some hiccups. One has to be cognizant of it, but at the same time, if you want to take advantage, Canfin Homes can be one good opportunity.
Jagannathan, we leave it at that. Thanks much for joining and giving us that perspective. Manav, just a quick thought on two stocks, Vinati Organics, which is trading at live highs, and Delta Corp, which the last couple of days has done extremely well.
See, looking at the charts of Vinati Organics, yes, the momentum is very much in favor for this stock. It is continuously forming a series of high tops and bottoms. There has been some decline from the intraday highs, but I sense this momentum is still very strong, and anybody who is still invested into this stock should definitely continue to maintain their long positions. On the lower side, 1950 would be the positional support for the stock, and I believe, looking at the current momentum, will not be surprised to see if the stock manages and moves beyond 2200 in next 3 or 4 months time frame.
Okay, let's the markets. Gentlemen, stay on. We'll just take in closing thoughts from you. But here's how the markets are shutting shop today. 0.5% for the Nifty 50, about 1% lower for the Nifty Bank, and the small caps should come up on your screen as well. I think the broader markets too in the session today, quite unlike. I'm not saying they have really cracked under pressure or something, but quite unlike the last few days, might be a bit soft on a relative basis, about 0.75% in the red. Let me talk about the large caps first, though. What's gained and what's not. So what's gained? Well, some gains for Bharti Infra. Sun Pharma gains a little bit, couple of percentage points on the guidance that they've provided for FY20. TCS, HCL Tech, Wipro, and Tech Mahindra show that there is some bit of flavor that's happening in IT today. What's not done well? JSW Steel 4.5%. SBI about 3.5%, some long unwinding being seen here for sure. Tata Steel about 3%. So metal names have taken a bit of a stick today. Z Entertainment corrects, ICICI Bank corrects, and some bit of pressure on Maruti Suzuki and Tata Motors in the session today. So autos by and large, along with metals, seem to have taken it on the chin today. But that's as far as large caps. What about mid caps, Navneet?
Well, Neeraj, alongside benchmarks, you also had the broader markets which came under pressure. Let me start off with a couple of gainers. First, there were a lot of stocks which reacted to earnings. So one of them was PFC, which was up in today's trading session. In fact, if you look at the numbers, the EBITDA for the quarter gone by was up nearly 5%, and the stock trading in the closing in the positive territory with gains of 3%, but off the day's high. Max Financial was the other one. The company came out with its earnings yesterday. The VNB business growth was good, and the stock's closing almost at day's high with gains of about 3%. V-Guard is the other one. The numbers came in today. We were discussing this stock during the show as well. Good set of numbers, but the stock was also up last week. So post the numbers, the stock has seen gains of about 1.5%. Margins for the quarter was at about 10.5 versus 5.7 seen in the corresponding quarter. Aurobindo Pharma from the Pharma pack, that was the other earning which came by yesterday. Good set of numbers, but if one were to look at the balance sheet, I think the gross debt for this company had gone up 1.5% higher, nevertheless closing at levels of 685. Can Fin Homes, one of the F&O gainers for the day, the stock's closing with gains of about 1.5%. On the losing side, S Chant, I guess, reacting to its numbers today, the stock's down or closing also around the day's low mark with cuts of 14.5%. PC Jewelers, another F&O loser for the day, the stock saw cuts of about closer to 9%, closing coming in at day's low. PNB numbers came in yesterday. Higher provisions dented the numbers, but looking at the fine print closely indicated that the fresh slippages were higher than what the street was expecting, 5% lower for this one. Reliance Capital came under selling pressure when the markets fall. These are high beta stocks, so these also tend to follow the move. 4% lower for Reliance Capital, and Ujjivan was down. Besides that, the steel makers saw some selling pressure. So from the broader market, you had Steel Authority, which saw cuts of about closer to 3%. The stock is closing around the level of 51 to 52. Third straight day of a lower circuit coming in for Manpasand Beverages, and the circuit limit revised from 20 to 10% for the day. 63 is the level. Cummins Industries is the other counter, which saw some selling pressure. In fact, this is the other F&O counter which saw some selling pressure towards the end. 766 is where it's closing for the day.
All right, so the three-day record closing streak comes to a pause in today's session. For the indices, we are down, and that's the final tally on the Nifty Bank, down a full percent, 300 points shaved off. Nifty 50 down 65 odd points, and the Sensex also losing an equal amount. The broader market space is under pressure in today's session. So you've got the advanced decline ratio, which will come up on your screen, suggesting the same. And it was probably the case right from the word go. Towards the end, it just worsened. So about 1:2 in favor of the declines this afternoon.
Well, with the markets falling today, India Volatility Index, I guess, once again inched higher. But for the series, it's come off those levels of 28 to 29 that one had seen. So closing coming in at about 16.3, higher by 3%. One day before the expiry, let's see how the participation panned out in terms of turnover. The NSE F&O turnover has picked up from yesterday's levels of 9.5 to 10. Today, it's about 11.26 lakh crore. The NSE cash, Devina, I guess, was above 51,000. So that's, I guess, come back
normalized.
To, yeah, it's normalized.
But you know what the surprising part is? The last 2 months, when you've seen monthly expiries, 1-2 days prior, we've seen bigger numbers. We've seen like 15 lakhs plus. So this number probably in comparison to that looks a little faded. But nonetheless, tomorrow is the big day, so we'll see how that shapes up. But individually, contributors on the index see what gained, what lost. TCS added about 9 odd points to the index. Sun Pharma moved up, and HCL Tech did well. On the losing losing end, ICICI Bank, SBI, Reliance Industries, heavyweights here that managed to pull the index lower towards the end of trade. But closing comments then from our technical experts as we head into trade tomorrow, the big expiry day. Ruchit, what will you be watching out for?
So I think if you look at the options data, 12,000 call option already had the highest amount of open interest, but in today's trading session, even 11,950 to 11,900 call option has witnessed some sort of open interest addition. So I think we would broadly see some consolidation phase tomorrow as well, maybe in this range of 11,850 to 11,950. This would be the 100-point range where Nifty would continue to consolidate and may show some expiry moves in this range only. But purely from a positional perspective, this consolidation just seemed to be a part of an uptrend, and once this expiry factor is over, we are expecting a continuation of the uptrend, and we expect the Nifty index to head above the 12,000 mark quite soon.
Manav, your closing thoughts?
See, 11,800 would be the continuous support for the market. So until unless 11,800 is not breached, I sense the short-term trend definitely would continue, and 12,000 would be the resistance. So this is a broader 300 to 400 points range for the markets in the near term, and within this range you will definitely expect stock-specific action to continue for the Bank Nifty. The important support for Bank Nifty is at 31,000. So 31,000 is a very short-term make or break support levels for the bulls. So only break below 31,000, you will witness some sort of a selling pressure. So till then, I think these are the important levels to look out for. And specifically from the PSU banking space, SBI has declined from its important levels. So looking at SBI, which would be one of the leading indicators for the PSU bank. So as long as looking at the larger term perspective, 340 is an important support for the SBI. So if SBI manages to sustain those supports and would witness a break on the upside, I think that would add some throttle to the Bank Nifty. So going forward for the expiry tomorrow, it could be a range bound move, and one should hold on to its support level is what we're expecting.
Okay, we'll leave it at that. Ruchit and Manav, thank you so very much for joining us this afternoon with your thoughts. And on that note, it is also a wrap on Countdown. It's a goodbye from Neeraj, Navneet and myself. Thank you so very much for watching.